Hello and welcome. Today we're going to be covering a very interesting company. It's in the stainless steel space and it has a niche within the stainless steel space as well, but not a deep competitive moat kind of a niche, but a niche nonetheless. But they're getting into circuit boards and that could really be the flip that the company requires to build out a niche. Now, in terms of the stock price action, you can see it over the last few months, at least since this investment has been announced. You've seen the stock really take off and you've seen a 68% return just in the last few months that we've seen on Ratnaveer Precision. Also, the FY27 guidance is extremely strong. 1,500 crore in terms of top line is what has been guided. The standalone, on top of it, the newer businesses which they're going to enter, and I'm going to describe them, is going to likely bring a better the copper laminates business should bring even better revenue and thereafter should even push revenue higher for FY28. So we'll get a sense of how this plays out in terms of the story. But first off, as we always do, take a step back, understand the business better. One, its industry is stainless steel manufacturing. It's into precision engineering and now into electronic materials as well, or getting into electronic materials. It was incorporated in 2000, in the year 2000, and headquartered in Vadodara, Gujarat. It's listed both on the NSE and the BSE. The IPO was in September 2023. It has raised public funds again very, very recently through a rights issue as well as a QIP. Current market cap is roughly 1,800 crore. That needs correction. In terms of the story itself, what Ratnaveer essentially does is it melts its own stainless steel scrap and turns it into washers, tubes, sheets and fasteners. I'll take you through each of those as to what they mean. But essentially, the stainless steel scrap is brought in, it's melted, and thereafter sheets are made and various products are made of it. So it's into stainless steel products essentially. What it makes, it melts its own stainless steel. It cuts the raw material costs and that typically others can't do. Others have to purchase stainless steel and thereafter build the washers, tubes, sheets and fasteners, but not for Ratnaveer. Ratnaveer is able to melt it themselves and create it. The bet is, of course, India manufacturing and infra boom, and that will require products like these in the stainless steel space. The inflection, though, is coming from the Copper Clad Laminate plant, which is something which the company has set up, expected to start operations by November of 2026. This is again built in Vadodara itself, and it's a completely new segment, not something linked to the existing business of the company. So completely new business which the company is entering. Now let's talk about the product list. First off, what are washers? They're basically flat metal rings which are used, and of course it's a high precision component, and therefore it's something that Ratnaveer does. And along with it, what it does is it does over 3,000 SKUs within the washers segment alone. Different types of nuts and bolts which they use, and it has to be high precision because the bolt can't wiggle off. These are generally used in, say for example, the auto space. You can't have that bolt really wiggle off. The second is sheets, and this is the basic raw material component of stainless steel, where they bring in scrap steel, they heat it, they melt it, and they melt it into sheets. That is then used to create washers and the like. So sheets is the other one. Tubes and pipes is the third. It's basically the hollow tube which gets created, and that is also one of the forward integrated products post sheet manufacturing. Then you have nuts, bolts and clips. Again, 3,000 plus SKUs even in this segment. You've got small metal pieces that hold two other things together typically, and that's what nut, bolts and clips are. Then they are also into solar hook manufacturing. And those are basically metal brackets that clip solar panels onto a roof, and that is something also that they manufacture. And the last one and the newest one is the circuit board material, which is the laminate itself, which is the base material of a circuit board. For this, they've actually got PLI approval as well, and the government has recognized them as one of those crucial manufacturers. By the way, the size of this industry is around 5,000 crore in India. I got to know that from the PPT of the company. 90% of that is imported, and therefore you've got a very large stretch of imports which one can cover. And of course, the pricing of it, the competition of it is something we'll quiz management about. Now, in terms of how the raw material is brought in, one is you've got scrap metal which comes in. I've spoken about that a couple of times now. They convert stainless steel scrap into ingots, coils for their own use. And then there's backward integration, which reduces exposure to external coil and sheet suppliers. Let's talk about the electronic materials segment. Now, this is new, of course, the CCL or the Copper Clad Laminates. These are basically resin glass laminated sheets of copper, and this forms the base of a PCB or a circuit board. It's approved by the government's ECMS manufacturing scheme. 338 crore is the investment quantum over the 3 years that it's valid for, and it's approximately 60% complete as of today. In terms of geographic reach and where does Ratnaveer Precision sell to, predominantly India. 94% is domestic in terms of their customers and where they sell to. 6% is exports. This is based on FY26 revenue. FY27 Q1 is slightly more skewed towards domestic than export. Just 3.5% export, 97% domestic. Let me also talk about the countries that they export to. They export to 31 countries. And of course, their manufacturing plants are largely Gujarat based. But in terms of states, Gujarat, Maharashtra, Rajasthan, Karnataka, Telangana, so a whole host of states is the customers are placed across India. In terms of customers, they have 89 distribution partners at this point in time. You've got domestic as well as export markets these distribution partners cater to. The global customers around 219 at this point in time. The customer base covers a whole host of sectors: auto, railway equipment manufacturers, you've got infra and construction contractors, you've got solar panel installers, not surprising, EPC contractors, and then you'll have the printed circuit board industry as well, which will become a customer of Ratnaveer Precision once the CCL as a product starts to kick off. In terms of the financials now, let's quickly take you through that. The revenue has grown at a 31% clip, so very strong in terms of the revenue growth. Of course, FY23 was a slightly lower base versus FY22. You didn't see very strong growth, but post that, you've seen a very, very healthy clip of growth. And from this 1,100 crore number, revenue is further expected to go up to 1,500 crore in FY27. So you'll continue to see the sharp growth going forward. 25% is what the target growth rate is, 20 to 25%, but that's post FY27. Let me also take you through the EBITDA number, and that's also held up very well. 35% growth in terms of EBITDA. Mind you, it's a commoditized business where they can't find scrap stainless steel. They are forced to buy stainless steel, fresh stainless steel from the stainless steel manufacturing companies. And that obviously is the other piece. But largely, it's a very commoditized business, whether scrap or fresh, regardless. And that's something to keep in mind when you're looking at this. Also, the contracts are short duration. So orders are placed and within 3 or 6 months, they're delivered as well. So the order book isn't sizable either. So two things to keep in mind when you're thinking of Ratnaveer's business. Last off, let's look at PAT growth. And PAT growth also largely in tune with the 30% plus kind of clip that they've done. So off a low base, you've seen decent PAT growth. Last off, I want to cover margins as well. And you'll see that margin trajectory being between the 8 and the 10.5% range continues to get better. The goal is to get to a 9% PAT margin. Now, I don't know whether that is doable or not for FY27. We'll quiz management, but the goal is to get to 9.5 to 10.5% PAT margin. How quickly do we get there is the question. Let's talk about the balance sheet now. And in terms of the balance sheet, you are sitting on around 670 crore of equity. There's been some dilution which has happened, both a rights issue as well as a QIP. So you've got a book value of around 670 crore. 1,800 crore market caps, around 3 times book is what this one trades at. The borrowing is at around 335 crore, but you've also got a cash bank balance of 269 crore currently. So you've got that tilt, but there's also capex at play. We'll try and understand how this evolves. Also brings us to the cash flow. The cash flow has been strained. FY26 has been a tough year with regard to cash flow, negative 48 crore operating cash flow. And that is because newer SKUs are actually delaying cash flow from coming in, is what the management has said. We'll have to wait and watch as to how this plays out as well. Something to keep in mind. You've also seen a fundraise due to which the net cash flow is sharply positive. But something, again, to keep on your radar is the cash flow from operations, whether it continues to come through or not. We're neutral on this one. Let's talk about the return ratios. And again, you'll see the return ratios being between a 12 to 14% clip. I wonder if it gets better given the large fresh capex that they're doing. But again, we'll get a sense as to how return ratios evolve. I mean, I was doing some rough math, and on the fresh capex of CCL that they're doing, it can bring in around 750 crore of top line at around even if I were to keep a blended 10% PAT margin on that, that is around 750 crore. So that's quite a decent ROC on the capital that they are investing. Just broadly speaking, it's in line with what the current ROC numbers are. Shareholding pattern, you're seeing around 46% promoter ownership. FI is at 4%. DI is at around 2% currently. Public holds 49% stake in the company. Valuations currently trades at 27 times. After the run-up, it trades at 27 times, trailing 12 months. I'm talking about trailing 12 months here. 19 times is the 5-year average in terms of trailing 12 months. The 5-year range is between 13 and 35. Obviously, we'll wait for execution on CCL, but that's a key component. And that's to some extent already started to get priced in. 30 to 35% premium to the 5-year valuation is what this one already trades at. But if you go by the guidance of 1,500 crore top line, and even if I were to keep a 7% PAT margin, that means you'll see PAT expand very, very sharply in the current financial year itself. And this is just some of the guidance that's coming our way. You'll see some of that on your screen. At 69% utilization, you're at 750 crore in terms of top line in CCL. FY27 PAT margin, 9%. Well, it's not a hard guidance given, but we'll quiz management on that when we have that conversation. What we'll do is slip into a very short break, come back. We have with us Vijay Sanghvi. He's the Managing Director at Ratnaveer Precision. And we'll speak to you, Vijay, on the other side of this break. Stay with us, viewers. Welcome back, and we're in conversation with Mr. Vijay Sanghvi. He's part of the promoter group at Ratnaveer Precision. And Vijay, great having you. Let me first start off, Vijay, with the new CCL segment that is expected to come on stream in November 2026. This is a completely new segment for you, right? Raw material sourcing, customers, completely different from your existing line of business. Talk to us about the rationale of getting into this first off.
Yes, good afternoon, Harsh. Thank you so much to give an opportunity to present the company in front of the public on the screen. About the CCL, yeah. So about the CCL is a main of it is a copper clad laminates, is a mother of PCB industry. So important, this idea would be coming into the mind of when we think over to the next future business. So we look forward in a couple of years ago that how we can be diversified. And we see the copper clad laminates, and we attended a lot of global exhibitions, conferences, and see that the electronic era of in India is the next future. So we look forward that this future and the intelligence part that can be opportunity is coming up very clearly. Vision we can be see over there. And when we go into the depth of this project, the copper clad laminates, and we see that the country and the nation would be dependent on the copper clad laminates more than 95%. So this could be fine and one of the new opportunity. And we knock the doors. We try to get captured to meet the many consultants and experts of this field from the globally, internationally, and the domestic people also. And when we go through the 360-degree dimensionally study about this project on the side of the technical, on the side of the commercial, as well as to the raw materials and the technocrafts of the team, and find out that it could be a very opportunistic area, as well as the support and the ecosystems which we can be built up for the materials, for the electronics that can be needed. And the government is also been very keen and the very aggressive for this electronic field as well. So we look forward these decisions in front. And if you can see, that's the copper clad would be a mother of the any kind of the PCB industry. Without the copper clad laminates, PCB cannot be produced. So we look forward all the 360-degree, evaluate the project, and we come forward with this project in the last November.
Right. But Vijay, give us a sense, because you'll require a fully new supply chain for this. Where do you source all your raw materials from? Copper clad laminates are not something which have the same supply chain as your traditional stainless steel products.
Yes, Harsh, you have been very truly correct, and I would be very happy to answer it. It could be very interesting as well. So you can see that we have been evaluate not only the raw material, but first we can evaluate the supply of the technical support. So this could not be available in India, and we have a technological partners available in a Chinese company who are been responsible for all the turnkey solutions from starting the machine manufacturing to start to end, the looking after the process, make the SOPs of the all and each standards, as well as they have been enough experience for setting up the plants globally as well. And also they have been responsible till up to the quality of the product and satisfaction of the customers. So we find a correct partner out of the last 9 months of the negotiation, and then we can find out the correct partner who can be cover all of the things over there. Equally, in copper clad laminates, that is using the formulations of the epoxy resin glues with the different kind of the chemicals. Number two, there is a copper foil was a very important playing role, as well as there is a glass fabric, which is a very, very important raw material for this. And also the filler wire and other materials will be there. So we have been tie up with the all the raw material sourcing very nicely, and the last 9 months, we have been collaborate with the companies, two raw materials from the China, chemicals from the India local domestically, and we make the all the orders in place. And the raw material supplies have been very enough and very comfortably we can be supplied over the chain. And after that, there is a technocraft who is behinding the mind for this project. We have also been tied up with the team who can be
Right.
handled this very smoothly and easily. We have been enrolled the Chinese technocrats on the company
Okay.
roll so that
Okay.
they can be served for the next 2 years of the contract to establish
Right.
all the 5 lines and have the experience of 28, 29 years into the CCL business with the different companies. They have been already associated with us and they can be
Got it.
provide their knowledge, know-how, and technical support to the company with our technical team, and also train them in a local people also as well. So this is how we can be tie up with this, and the government policy of ECMS and PLI, this can be covered, which can be significantly cover the risk of the mitigate of the commercial side. So this is all how we have been cover up this project totally.
Understood. Let me ask you some numbers. First off, Vijay, you've got,
Yes.
and I'm going to break this question into two. First part is with regard to raw material costs and the pass-through. Epoxy, copper, these are all raw materials which fluctuate in price. Is there a clean pass-through of that to the customer? And what makes you confident that you will be able to compete, because you'll be competing with global players, right? What makes you comfortable that you'll be able to compete there? What's the cost differential, India manufactured versus, say, imported from China, Korea, and the like?
This would be a very nice question, and we have been truly very deep dive into the working onto this direction as well. Number one, about the raw material pricing and the passing through, that could be a very significantly very clear. And there is a globally right now is a very huge shortages of the CCL would be there because the finished product of the PCBs demand would be too high and it was huge. And if you can be surprised to hear me, and a lot of circulars have been there, that the CCL pricing have been increasing more than 300% plus in the last 9 months. So it can be changeover and the game changeover for the all the business margins. But also you can surprise that the raw material pricing are just increasing in between of range of 15 to 20%. So there is the huge supply and the demand gap would be there. Shortages will become extra mileage to the company into make the profits and the good profits and the revenue generations for the companies as well. So that would be a clearly pass on the all the raw material fluctuations would be done, as well as there is a huge gap of the demand and supply, which can be benefit into the revenues and the profits to the companies growth as well. And it was the one of the first movers into the country as well. This can be a direct benefit to the company as well, which we can be seen nowadays very clearly and visualize very clearly. Number four, that the competitions matters. So competitive matters because the India would be dependent on to the indigenous. So on the imports only. And equally here, the domestic, we have been evaluate to the all the PCB manufacturers maximum. We go and we meet to them. We got the many soft confirmations for the full line, total orders for the long-term contracts from the large companies to the lower level of the companies. So the order would not be a big issues right now. There would be a huge shortages over there. If we can be complete our 5 lines in a first shot also, then also we can be meet to the orders requirements very clearly. Also, there is a lot of push from the industry as well that we can start very quick, and the people are being eagerly waiting and excitedly waiting over there. Number two, we have been setting up the plant as good as the global plant and the MNC plant would be set up. There is a no compromise into the any kind of the equipment and the systems and the technocrafts who are handling the plant. So it would be
Right.
apple to apple plant can be established, whatever the global plants are there. So quality wise and the deliverance as well as to the handling the equipments, that can be a no compromise would be done by our side. The management views have been very clear about the quality and the deliverance, and the equipment would be equally matching to the same level playing field over there. So we have been
Right.
always been our local manufacturers. The operational cost would be a better always. So we have been very much competitive over there for the last 15 to
Right.
20% competitive from the import pricing. But equally,
Right.
that's when these shortages and the prices have been increasing. So definitely that can be a competitiveness question would be almost ignorance. There is a requirement of the material would be a much higher scale over there. In spite of
Point
the
taken.
paying advances, in spite of the paying advances money to the overseas suppliers, the
Hmm.
here in the domestic industry are not been getting the material enough in time also. So that would be an advantage opportunity for the company who are been coming up, setting up the best quality of the product and deliverance to the local industry and get the extra
Right, Vijay.
mileage and the advantage to the similar companies. Thank you.
Right. Vijay, I have just 3 minutes, so I'm going to quickly try and ask you as many questions as possible. One is
Oh,
with
please.
regard to CCL, therefore. You've suggested that 69% capacity utilization will happen in FY28, and that will add around 750 crore to top line. Am I right?
Yes.
Okay.
If we can be set up the all the 5 lines together, the 750 crore is a revenue model over there with the EBITDA of 20% and the PAT of 13%. And any kind of the subsidies advantages will not be calculated on the safer side. So the capacity utilization we calculated the 69% on the safer side because it's a new line over there. But due to
Understood.
the price rise, these numbers can be changed. But yes, on the safer
Okay.
side, this number have been very, very conservative.
Okay. And with regard to FY27, what's the impact on top line going to be like? You've guided for 1,500 crore top line. How much of that is going to be this particular business, the CCL business?
Yeah, for the 27 from the CCL business on the safer side, we have only the last quarter over there. So on the safer side, we have not been calculated the numbers for the revenues for the CCL business over there. If there is some revenues would be there, it cannot be a much impact on the top line revenue. But yes, the company's revenue of the 1,500 crores with the EBITDA of 12%, with the PAT of 7%. That is what we have been projected for this 27 years for the FY27.
Your PAT margin for FY27, if you can give us a perspective, ex-CCL?
Yeah, ex-CCL on the stainless business, that is a 7%. And from the CCL business, we have been expecting the 13% PAT margin over there.
Okay, understood. And with regard to, last off, with regard to how you're managing your working capital, will CCL actually worsen the receivable and working capital cycle for you, or do you expect a steady working capital cycle FY27 or FY28? When does working capital cycle steady for you?
Okay, so working capital cycle in the stainless steel business, you can see that in the last 3 years, that can be improving drastically. The industry's rational says that it could be 110 days, 115 days, and we could be enough to handle it by the 90, 92 days. So it can be a great controlled by the entire team over there. Number two, about the CCL, at this moment, it's going to be a new business. We can be identified for the 110 days would be ideal for the industrial standards. So it can be maintained with the 110 days in between of it. Once upon a time, first quarter and the second quarter can be passed, then we can be understanding into the better rationale about the CCL business working capital cycle.
Okay, understood. Vijay, thank you so much for coming in and giving us that perspective. I'm going to have to let you go, even though very interesting story unfolding. But thank you so much for your time. Totally timed out on this edition of All About Your Company. Viewers, thank you so much for tuning in. The 1,500 crore is just on the base business. On top of that, you'll have CCL in terms of the revenue for FY27, FY28 base business at 1,800 crore in terms of top line, and on top of that, a CCL CCL revenue of around 750 crore conservative is what Vijay has given us in terms of guidance.